Hey guys, hope you're good. So today I'll be teaching you how to trade using price action. So stay tuned. So what is price action? Price action is simply trading based on the price. No need for indicators, no need for moving averages. You just trade based on the price. So I'm gonna start with the most famous one, which is support and resistance. Right, cool. What is support and resistance? Support and resistance is just an area where a price is most likely to bounce up and down. Right, so I'm just gonna give you a demo here, an example. So I like using the tools instead of the chart. Right, you have something like this. Right, this is your resistance, the top of the price, and the bottom of the price is support. Right, so then the price comes, does this bounce, then does this bounce, bounce. It's gonna leave it like this. So normally when the price bounces here, this is your resistance. When the price bounces here is your support. So what traders do is they look for price to come back at the same area or same level again. And then what happens is when they see the price coming from here and it bouncing a bit, they enter a sell on a resistance level. Right? And then their take profit is their support level. So normally put a stop loss right, not right behind, but behind the resistance, the price where it turned before going down. So that's how they trade support and resistance. Simple as that. So I'm gonna teach you now on the next one. I'm gonna show you how to incorporate support and resistance with candles. You are making it more stronger, more probability. So stay tuned. All right, cool. Normally traders, before they trade or they enter a trade, they wait for a signal. So does it mean that when the price is a support, which means is buying, does it mean that when the price is here, which means it's selling? So normally they'll wait for a couple of candles, right? So I'm gonna give you the most common candle that they use is a doji. A doji candle is like this. Like this. So if we're using an arrow, but yeah, it's like this. It's like a plus candle, like this. So normally when the price is about to reverse, it will give you a doji candle. This is the most common one. Then when they see a doji candle on a support and resistance, understand that there's two signals. First signal, you have a resistance area. Number two, you have a reverse candle, which is a doji candle, right? Then when they see that, they start trading, they enter a trade, right? And another formula, again, another pattern candle that they use is an engulfing candle. So normally an engulfing candle will be something like this. You have a candle that is going up, a bullish candle. I'm just gonna make this one as like it's a green, which means it's a bullish candle. So I'm just gonna fill it with green. Right, this is a bullish candle, right? And then when it's around here, then they see this one, the bearish one. This one, you can see the difference. This one, the other one is bigger than that one. So this is a reverse, this is a bearish candle. When they see this happening here, when they see that this candle is bigger than this one that is going up, let me just direct them. When they see that this candle is now being engulfed by this one, then what happens is another signal. Right, it's another signal for them to trade. So they don't need to they don't need to wait for only a doji candle. This also is also a reversible candle pattern. So when it's around this side or around at the resistance area, when it's around here, because obviously it showed you the price is showing you that, okay, when I'm around this area, I've bounced, I went to this area, and then it's coming again here. Then when they start seeing this, that, okay, this red candle shows that the price about to go down, they enter the trade and they sell, and then up to a certain position, obviously where the price started. Same thing in support. When the price comes back here, they do the same thing. When they see a doji candle, that little plus candle, they buy, right? And opposite will happen when it's around here. This will happen. This will happen. So this will be a down candle, which is a red one normally. So, right, this will then become a green one. Yes, when they see this happening here at the resistance, at support level, at a support level, what happens? They buy, they enter a trade. Same thing, enter a trade after the candle closes. Obviously, wait for candle to close. They don't trade while the candle is still busy. They wait for candle to close, then they enter, take profits here, and then they put their stop loss right behind the support area. So in my next video, I'm going to give you another tutorial of a pattern, right? So we're gonna include patterns with support and resistance. So stay tuned. All right, cool. In Forex trading, we've got chart patterns, right? So we have chart patterns for reversal that give us a signal that the price is about to reverse. We have chart patterns for continuation, which give us a signal that the price is continuing. So there are a couple of chart patterns, but I'm going to give you the most common ones. So they use where the traders use to spot a reverse or to spot a continuation. So, but since for now we are working with support and resistance, I'm gonna show you a reversible pattern, not continuation patterns. So the most common ones, and what happens is you have a price, right? They call it a flag. This one they call it a flag. I'm gonna draw it for you and show you how it looks like. It looks like this. Do not focus here. Look at here. So it looks like this. So this pattern is a reversible pattern, right? So normally it will end by breaking to the downside. I don't know why did I draw it. Let me draw it properly so that you can be able to see. So it will normally end by breaking to the downside. We'll do something like this and then breaks. So normally when you have something like this is a reversible pattern. It gives you an indication of a possible reverse, which means opposite direction. So I'll plug it into the thingy. So you'll have something like this. Let me pull this one here. You'll have something like this towards the chart, the resistance area, right? So what happens is the price pushes up towards resistance and then start doing this. And then most of the time, because most of traders are looking at the resistance area, it will, like most of the time, it will break resistance. It will break resistance. It will do something like this. It will break resistance area, right? It will break resistance area and then catching traders on the other side. So when traders see a price breaking resistance, what are they thinking? They're thinking, okay, the price will continue to buy. Forgetting that we have a pattern, a reversible pattern. They call it a flag. Reversible pattern. So what smart traders do is when they see this flag, they see that, okay, the price is about to reverse. So even if the price breaks resistance, they don't panic. They're waiting for a price to come and break this side. Once the price breaks here, what now smart traders do is they enter the short. They put a resistance behind the pattern. They put a stop loss behind the pattern. Take profit right at the bottom. So this is more smarter way of trading. This more technical way of trading. And it happens a lot. Same thing with buying, or same thing with support. The price, let's delete this one so that I can show you. The price will do the same thing in support, right? So what the price will do, it will come here, right? And then create that pattern. Do this. It will do something like this. Please excuse my drawing, guys. It will do something like this, right? It will do something like this towards support. And same thing, it will break most of the time. It will break support. And what happens to those traders? What happens to those traders who are solely trading support and resistance the way it is? And then breaks. Resumes, goes to the top. Then resumes and goes to the top. And then what happens? Smart ones waited for a price to break. The ones who are trading support and resistance, they've entered without checking the flag. Understand that within this flag, you can get a doji candle. You can get something like this as well. So this for me is a safer way of trading support and resistance. And what happens? Smart ones, once it breaks this little flag, they buy. Put stop loss behind the flag, and then boom, the price pushes up. So that's your two common flags. There are other flags for reversal. There is a double top, there is a double bottom, there's a treble. So, but this one is common. So let me not be selfish and show you the double top and the double bottom. I'll show you in the next slide. Right, just like I promised you. So one of the common patterns as well is double top and double bottom. So how traders trade them is, let me to remove this one, sorry. So they wait for a price to do a two touch, right? So I'm gonna start with double bottom. The price will come here to the support, bounce, and do this. Push a bit up and bounce, and then push up, right? So what traders do is when they see this pattern, they trade on a break of this neckline. Remember, the price bounce and bounce and bounce for the second time, then breaks. So what those traders do is once it breaks this neckline, this which they call it a double bottom. Once it breaks this neckline, they buy. Put their stop loss right behind the pattern. And then TP hit, same thing as double top. Same thing as double top. They wait for a price. Price comes up. That's this at the top. Bounce. Come back. Bounce. Push to the downside. How do they enter? They enter on the neckline. Then what happens when it breaks the neckline? Then what happens? They put a stop loss right behind the double top, the pattern, and then there's the TP. Right? And also to bear in mind, there is a triple top and triple bottom as well. So you only focus on the neckline. You get the neckline, and then once it bounces, then you can trade. So an example of a triple bottom. This is a triple bottom. Bounce one, then bounce on the third time, and then it pushes. Same thing. It's similar to double top. Once it breaks there, same trading. Once it breaks the neckline, traders buy. Right? Put TP. Sorry. Put a TP here. And same vice versa. Same thing as triple top. So I'm gonna show you how to trade retest as well with this double top and double bottom in the next slide. Alright, cool. So I'm gonna show you how traders also wait for a retest, because sometimes the price doesn't just shoot the way I'm showing it. Right? So what they normally do is they wait for a retest. So retest is also another confirmation for those price action traders. What they do is after it crosses the neckline, they don't rush to trade. Right? They don't rush to trade. So what happens is, I'm gonna show you. They also wait extra time. So what the price does is comes here, do a double bottom or maybe triple bottom, doesn't matter, as long as we are focusing on the neckline, right? And then what happens is the price breaks the head or the neckline and then bounces and pushes up, right? This is a retest of the double top, the double bottom. A triple bottom, sorry. So whether it's going to be a triple bottom or is a double bottom, they wait for a retest. The price also sometimes comes and retest. So for them, retest is a confirmation. The breaking of the neckline is not a confirmation. For them, it's the breaking of the retest. Sorry, the retest is a confirmation. So they enter on a retest here, TPs here, and then they'll put a stop loss underneath the retest. Same thing happens from at the top. Double top, price, retest. Let me show you. Let me not be selfish, because probably you might not understand what I'm talking about. So the price comes here, then do a double top, right? Or a double top, it doesn't matter. And then breaks it, then come back, and then pushes down, sorry. Then what happens? Those traders do? Come here, draw the little line, and then obviously when it breaks, when it comes back on the retest, that's what they call it, the retest, It retests it. It turns this into a resistance. The breaking, they put it behind the retest line, and then boom, there's their TP. So you have to understand that retests, they don't happen all the time. They happen sometimes. So some traders will hold, some traders will wait for a retest. So, and one thing to understand is, doesn't mean that when the price is coming back towards your entry, which means it's going to hit your stop loss. Sometimes it might mean that the price wants to retest and push down if you've already entered early. Because sometimes you wait for a retest and the price doesn't retest. It goes directly downside, doesn't come back and retest. So that's one of the things to bear in mind. And another thing about retest is retest doesn't only happen with only this pattern. It also happens during the trend line, right? So breaking of trend line. You have a price going like this. Let me just clear my screen, guys. Let me remove all the drawings. So you have a price going up like this. Let me draw the trend line first, because I know it's gonna give me an issue. Like, you have a trend, right? And then you have a price going like this. Up, down, up, down, up, down. This is a trend line. Up, down, and then it breaks. And then it comes back. This is a retest on a trend line. And then what happens? It goes down. What those traders do is, after the retest, they enter after breaking of the neckline of the retest, put a stop loss behind the neckline, and put their take profit where the trend started, which is here. So that's how they trade retest. So in the next slide, I'm going to show you continuation patterns. All right, stay tuned. All right, cool. So now I'm going to show you the price continuation patterns. What continuation pattern is? Continuation pattern is a pattern that shows that the price will continue or will resume to the same direction. So how does it look like? This is your example. The price goes up and does this, and then continues to the upside. So it creates this little pattern. Creates this little pattern. So it's also another flag in the middle, right? It's a flag after an impulse. So it's very important to understand these flags. There are a lot of them, but these are the common ones. The ones that I'm showing you are the common ones, right? And sometimes you'll have this flag on a support level, on a resistance level as well. So you have to know that when it's falling, when the price is falling, which is this flag, this is a continuation flag. When the price looks like it's continuing, it's a reversible flag. Right, so with continuation flag, how it takes out these traders, I'm gonna draw another thing here. And let's say you have price coming back down. No, not this one, sorry. Used a different one. So we have price pushing down and then coming here, and then you have something like this. And then this on a resistance level. So most of traders get taken out around this level, because what are they thinking? They're thinking, okay, this is a resistance zone, so the price is going down, sorry. They're thinking, okay, this is a resistance level, so since this is a resistance level, we expect the price to bounce from here, then go back down. And it gives them this. What happens? They enter. But what do smart traders do? They look at the pattern. They'd be like, okay, no, we can't enter the cells because we are seeing a continuation pattern. So now this is a signal that the price is about to break the resistance. So you don't always have this pattern right in the middle. Sometimes you have it in a resistance level. Same thing as support. You'll have the same thing in support level. So you'll have a price, right? You have a support, you have a resistance, support. So you'll be having a price coming to support level. Sorry, let me extend it. I don't want to read it all. Sorry, guys. Like you have this, right? You have this. And then you have something like this in a support level. And it does this. So what do support and resistance traders do here? They look at it and be like, okay, this is support. So on a support, we expect, what do we expect? We expect the price to buy. But what do smart traders do? They look at the pattern first. And they be like, no, this is a continuation pattern. So this, we don't expect the buys here. Let's wait and see what happens with this pattern. And then what happens? When the price breaks this pattern, they sell. When the price breaks this pattern, they sell. With stop loss right behind, we take profit. Normally when you don't have another support and resistance, they use the same length as this. They use the same length as the first impulse. So this will be equals to that. That's how they took their take profit. Alright, cool. So that's the end of the video. That's it with the price action tutorial. I hope that you guys have enjoyed this video. And then if you're new to this channel, please don't forget to subscribe. And also, guys, please don't forget to leave a comment and like and share the video. Thank you, guys.